Hey everybody, welcome back to Chip Stock Investor. Happy Monday. Hope you have a great week planned. We're going to start off this week by talking about AMD earnings from last week. But before we jump into the earnings for AMD, we're going to show you two charts that explain pretty much everything you need to know about this earnings season.
Pretty much everything. And the reason why we think these two charts are so important, as you probably know, a little over 2 years ago, we started the Chip Stock Investor channel on the premise that semiconductors would be the foundation for the new bull market. And yeah, here we are. You probably have noticed pretty much every media outlet wants to talk about chips, Nvidia, semiconductor manufacturing, you name it. Okay, so chart number one.
We have the end markets for semiconductors broken down into four different segments, and AI infrastructure is absolutely driving this new bull market.
And more broadly, AI infrastructure, that's the term that's being used by the media. And a lot of that probably because big tech companies keep saying AI, but really more broadly, what this is it's accelerated computing. Accelerating computing sales for 2024 are probably going to end up being somewhere around 110 to 120 billion dollars. Nvidia is 90% of that market, of that 110 to 120 billion dollar market. The rest of the pieces are being picked up by, of course, AMD, which we'll talk about here in a moment. Broadcom and Google, they have that partnership where Broadcom provides a lot of the IP for the Google TPUs, tensor processing units, and some scraps for everybody else. So whether it's Nvidia, Broadcom, AMD, or all of the hyperscalers, Microsoft, Azure, Amazon AWS, Google Cloud, Oracle, Meta, AI infrastructure, or more broadly, accelerated computing is the driving force behind earnings season right now. Anybody not talking about AI or accelerated computing is just kind of putting up some lackluster growth numbers at the moment.
Those other end markets, consumer, cloud, and enterprise, which would be excluding accelerated computing. And then finally, auto and industrial, they're just coming out of that bear market just at the beginning of a new growth cycle. And it's not exactly coming out of that slump very quickly.
Which leads us to slide number two. Everything you need to know about this earnings season.
What everybody wants to see is a sharp uptick to the right for these end markets. But really, what we're seeing is a very slow, gradual recovery, much more of a straighter line.
Yeah, we've heard some say Nvidia has sucked all the air out of the room. Maybe to an extent, yeah. In that enterprise computing end market segment, a lot of capital expenditures are just getting piled into accelerated computing, especially on Nvidia's hardware. Blackwell deliveries are going to begin here these next couple of months. We should get an update from Nvidia on that here later in November. But I don't know that I would say necessarily that the air is being completely sucked out of the room. Some of those other end markets that Kasey mentioned here in that chart, the consumer market and auto, industrial, and power chips, this is kind of just how new bull markets start. When you exclude new secular growth leaders like Nvidia, Broadcom, and what's the Magnificent Seven or the Ocho, if you add in Netflix, if you pull those out, it's just a more gradual recovery coming out of a bear market slump for everything, excluding those secular growth leaders, and that's pretty historically normal.
Before we get to AMD's earnings, let's talk about the new bond account from today's video sponsor, public.com.
A bond account? Seriously? Yeah, as you probably know by now, interest rates are finally coming down. The Fed did that rate cut back in September. More rate cuts are on the way. That's fantastic if you're looking to, I don't know, let's say take out a mortgage on a home, buy a car, any sort of financing product. That's great news. But if you're an investor, it means the interest rate on your savings account is going to fall as well. You can lock in a 6% or higher yield, though, with that bond account from public.com.
This bond account that allows you to lock in that 6% or higher yield with public.com will give you a diversified portfolio of high yield and investment grade corporate bonds. You might want to act fast though, because your yield is not locked in until you open an account.
Link in our description below to get started. It's quick and easy to open a new account at public.com/CSI.
Okay, now time to look at AMD's earnings. This is the guidance that AMD posed for this quarter that just reported. Revenue was poised to come in at 6.7 billion at the midpoint, operating margin of about 25%. Now let's take a look at where those numbers fell. Revenue came in at 6.8 billion, so just above that midpoint of guidance, 18% up year over year. Gross margin came in at 50%.
And we'll get into the operating margin portion of this at the end of this video. But the reason we're covering AMD earnings again is, as for the last year, we've been talking about what we expect from AMD. And as shareholders of AMD for the last few years, especially after the Xilinx acquisition, the bulk of our position came from two sources. First, when AMD acquired Xilinx and we got more Xilinx stock. And then also when we were rebalancing our portfolio in 2022 and we bought a bunch more of AMD stock at that time during the bear market. What we've expected from AMD, especially in the last year, is not for them to chase Nvidia in the accelerated compute market, but rather to optimize their profit margins. And that was the reason for the Xilinx acquisition in the first place. That embedded segment that you see here in this high level slide that AMD provided, embedded revenue that came from the Xilinx acquisition. And Xilinx had higher profit margins than AMD. And we really liked that pivot and that refocus on not just all out growth, but highly profitable growth for AMD. We're going to discuss that, but we've decided at this point that it might be time to trim or sell some of our AMD position here in the final months of 2024. We'll talk about some of the issues we have with AMD, but here's the two primary reasons that we're looking at possibly selling.
We already own Nvidia, obviously the king of accelerated compute at this moment. We have Broadcom in a portfolio and Alphabet, all for the accelerated computing market. We also own Microchip and Lattice Semiconductor for the embedded and FPGA market. So our bases are pretty much covered. And then second, we want around 5% of our portfolio in cash for Q1 2025, and selling or trimming AMD might help us get there.
Yeah, so just to emphasize this point, the primary reason we might sell is just because of what our portfolio needs. And so we'll kind of explain here from this point forward some of the issues we have with AMD and why we've landed on it as a possible sell to get to that cash position that we need and just eliminate some redundancy from our portfolio for the last 2 years. So we have basically two main issues with AMD and the course that they're on. We'll start with some really, really great news. For a lot of investors, it might make sense to just continue holding on to AMD stock. In the Q3 earnings call, Lisa Su said that the data center GPU revenue, or again, more broadly, the accelerated computing revenue, is now expected to be over 5 billion for 2024. Previously, 4.5 billion was the guidance. And at the start of the year, they said only to expect $2 billion. So nice continual upgrade to accelerated computing revenue. And this is really wild. Su continues to also hit on this number on the long-term expectations for accelerated computing sales, 60% annual growth to $500 billion by 2028. Pretty wild expectations. But even if AMD kind of just holds steady at, let's say, roughly 5% to 10% market share of the accelerated computing market, this could indeed be a very large line of business for AMD if, that's the big key word, if this outlook for 2028 holds true.
Just to give you an idea of what chip we're talking about when we talk about AMD's accelerated compute system, this is the AMD Instinct. So currently AMD is on the MI 325. They expect the 350 will be out sometime next year. And then possibly, maybe the MI 400 will be out at the very tail end of 2025. Let's continue with some comments from CEO Lisa Su that bring up a issue that we think needs to be addressed. Su continues that the early traction for these accelerated compute chips have been primarily with inference. So AMD's more profitable data center business is in the CPU market. At this point, the MI series, as she mentions, are being primarily used for the inference That means that AMD accelerator business could be cannibalizing its own CPU business to some degree.
Yeah. And we don't know to what extent this is, but the reason we say this is if you believe NVIDIA and CEO Jensen Huang, the entire existing data center industry as it stands right now, all those data centers collectively worth roughly $1 trillion. They get refreshed every 4 to 5 years. So 200 to 250 billion per year in possible refresh sales. All of that is primarily CPU based right now. And NVIDIA believes pretty much all of that needs to be accelerated. So the older CPU infrastructure gradually replaced with accelerated computing. So this is the problem with a business that has to, you know, upgrade itself, update itself, and cannibalize its older, more profitable business like AMD has to. That means that EPYC CPUs, again, perhaps the most profitable part of AMD's business, could run into some cannibalization issues over time. We'll come back to this momentarily, this problem with the accelerators being used now for a lot of inference work, which up until this point, the CPU business could handle.
This is the second issue that could be worth thinking about for AMD. An analyst asked specifically about AMD trying to catch up or compete with the market leader in Nvidia. AMD basically admitted that they're not going to be catching up with Nvidia's top products. They're, in fact, at least a year behind. When Sue mentions that the market is constrained, that means that AMD is really just picking up the slack that Nvidia is leaving.
Basically, after NVIDIA eats first, AMD is left to vacuum up the crumbs that are left over. This is a problem that really kind of relates back to the profit margin issue. So these accelerator chips possibly cannibalizing the CPU business to a certain extent. But as this market evolves and continuously migrates over to accelerated computing, favoring NVIDIA's systems like Blackwell, which is going to begin shipping here these next few months. This means that AMD isn't able to properly monetize its accelerator business the same way NVIDIA is. NVIDIA, the technological leader, gets to charge a premium price on all of its new product. And because AMD is a year or so behind technologically, the profit margins just aren't there. And we're going to shift over here to a quote from the CFO, Jean Hu, asked about gross margin of the GPU business being below AMD's overall corporate average. So the EPYC chips, the Xilinx chips, the FPGAs that they acquired back in early 2022, a much higher profit margin, and the Instinct MI series chips, a lower gross profit margin. Now, this makes sense. These MI series accelerators are a new business, and it does take time. This is ultimately a manufacturing business. And whenever you're manufacturing a new product, of course, your gross margins are going to be lower at the beginning. It takes a couple of years to ramp up and then start cranking out real profit. When you think of these accelerator chips, they're lower margin for now and also cannibalizing the more profitable CPU, EPYC CPU business for data center. This becomes an issue because AMD's average gross margin is already a problem. For a fabless chip designer of its size, these gross margins, 50% on a GAAP basis, 54% now on an adjusted non-GAAP basis, are already still at this point in time, after a decade under CEO Lisa Su now, are still below average for a fabless chip designer. We see this as a major headwind for AMD making more progress in the years to come.
And we promised we'd come back to that metric, the operating margin for AMD, because we have some serious questions about AMD's ability to push their operating margin higher, given the situation with the accelerator business. Currently, in Q3 2024, you can see the operating margin just at 11%.
On an adjusted basis, it was much higher. They met their guidance that they gave 3 months prior, but on a GAAP basis, just 11%. This is pretty low. And perhaps the above average operating margin in data center can continue to help pull this higher over the course of the next year. There's that headwind of the accelerator business. How much is it going to cannibalize the EPYC CPUs as accelerated computing sucks the wind out of the enterprise computing and data center market? We're not sure that this is going to be the great tailwind for AMD that a lot of investors hope it will be.
The upside to all of this is that maybe AMD's accelerator business does go to 10 billion or higher next year. But unfortunately, that's already priced into the stock. What we really need to see is higher profit margins.
You can see the profit margin progress over the last decade under CEO Lisa Su. Progress has been fantastic on a gross margin basis, but we see this progress slowing down in the next couple of years because of this whole trying to catch up or narrow the gap with Nvidia. And along the way, the adjusted operating margin was good. It's now mid to high 20% range, but this adjusted operating margin, free cash flow margin is still very, very low and down there in high single digits or low teens percentage basis, along with GAAP operating margin. This company is just not cranking out the cash that we feel it should after making that Xilinx purchase a couple of years ago. We were more than happy to hold on to our AMD stock after the Xilinx merger for this reason exactly. And it's just not 2.5 years into this, coming up on 3 years into this. It's not panning out the way we thought it would for AMD. They've taken their eye off of that embedded segment. Yes, embedded auto industrial chips, enterprise compute, it is in a slump. It is taking longer to recover, like we outlined earlier in that chart. But even so, that is the big moneymaker for AMD. And suddenly all of this focus, all of this capital for AMD has shifted to let's keep up with Nvidia.
As we mentioned before, unfortunately, all of that catching up with Nvidia is already baked into the stock price. These are forward-looking valuations on a 1-year basis. In purple, you see forward price to earnings right around 31x, and in green, forward price to free cash flow around 36x.
A bit of a premium price tag still.
Okay, let's go back to our 2 primary reasons we might sell AMD, and let's talk about the conclusion of the matter. So the first point is we already own Nvidia, Broadcom, and Alphabet and are fully diversified in this accelerated compute market. And for the embedded and FPGA market, we already have Microchip and Lattice Semiconductor in our portfolio. The second point, we want around 5% of our portfolio to be in cash coming into Q1 2025. So what does that mean for us in our AMD position?
We might trim or sell. We want to see some more earnings updates. We haven't seen Microchip or Lattice at this point. Of course, haven't seen Nvidia or Broadcom, but we possibly just see some opportunity here to cut out some redundancy from our portfolio. And in so doing, also raise our cash and equivalents position, which is an important component of any portfolio. We've been running at little to no cash for over 2 years now during the beginning of the bull market. As we explained in past videos, the bull market isn't brand spanking new anymore, so time to increase the cash. We have some issues with AMD, but ultimately the primary reason we might make this move isn't so much we're fed up and tired of AMD. They very much could have a lot to gain in the next 2 to 3 years. It's more just, it's us. It's not you, it's us.
Exactly. Make sure you've subbed to the channel and have notifications turned on. We have much more earnings coverage coming your way later this week, and we'll just keep them coming. Please check out our Semiconductor Insider membership. Just $5 a month gets you access to a ton of benefits. We do earnings coverage on pretty much every company that we cover here at Chipstock Investor. It's a lot of companies, and we can't make a video for all of them.
A lot of content over on Discord. That's where all of our content is now.
And it's just $5 a month, $60 a year.
And live Q&A sessions to boot.
Check it out. I think you might enjoy it. We'll see you again soon at Chipstock Investor.